All right. Hello, everyone. Happy Sunday. Hope you've had a great and productive weekend. I hope you can see me. I know there's a little glare in the background, but we'll have to work with that. Thank you for joining me today. It's Sunday. I know you have some preparing to do to get ready to have a successful week coming up tomorrow. But today, I just want to take some time to talk about mortgage note investing, and hopefully you find some value in this presentation. All right. So let's go ahead and get started. And today, as you can tell from our title slide, we're here to talk about mortgage note investing. But ultimately, what we're here to talk about is freedom, right? That is the whole goal behind any form of investing, right? Regardless of what route you choose. At the end of the day, we want our freedom. We want our financial freedom. We want our time freedom, and that's what we're here for. So a few questions to kick us off. And you can go ahead and drop your answers in the chat. I do have the chat pulled up here, so I can go ahead and shout them out as they come in. And we are live, so if I need to slow down at any point, let me know, and I will do that. But the first question is, what would you do if you could use your time however you saw fit? All right, so imagine all your responsibilities were taken care of, your bills were taken care of, everything was provided for. What would you do with your time? Would you travel? Would you learn a new language? Would you go maybe practice a skill that you liked when you were younger and didn't have the time to stick with as an adult? How would you spend your time if you could do anything you wanted with it? All right. So you can go ahead and drop those answers in the chat. The second question is, what if you knew that you were getting paid every month to live the life that you enjoy? All right. So every month you check your bank account, you check your direct deposit, and you know that when you look in there, you're going to have what you need to go ahead and live that life that we imagined in the first question. How would you feel? Would you be relaxed? Would you be excited? Right? Would you feel ambitious? Would you feel like, all right, I know I'm getting paid. I know I'm taken care of. Now I want to go pursue more. How would you feel if you knew that you were getting paid every month to live the life that you enjoy? Right? And the third question is, what if this wasn't just a what if, right? What if I told you that not only is this possible, but it could be a lot closer than a lot of us may think, right? And that's what we're here to talk about today, right? You can go ahead and drop those answers, and I will keep moving and shout them out as I go. But ultimately, again, what we're here to talk about is freedom. And the bottom line is that passive income is the key to a free life, right? So when we don't have to clock in for work anymore, for example, we no longer have to exchange our time for money, right? We're able to be more fulfilled. We're able to get more out of life, right? We can enjoy new experiences. We can spend our time with the people we love, right? And ultimately, my goal is to help you create that freedom, right? So a little bit about me as we get started. My name is Brian Royster. I'm a professional note investor. I'm the founder of Note Genius. And what I do is I buy predictable cash flowing assets that are secured by real estate, and they generate passive monthly income, right? So those questions that we were talking about, what would you do, if you knew that you were going to be taken care of? That's kind of what I do is create those opportunities and share them with people like you. I truly believe that there is no purpose in me pursuing this business, and these opportunities if I'm the only one benefiting from them. And so I like to spread the love, spread the wealth, because we all go further together, right? So again, here today, we're going to talk about mortgage note investing, which is a particularly niche branch of real estate investing, right? And most of us would say that we've heard at some point that real estate is considered to be the most efficient, I guess, way to build wealth over time, right? It's been that way since the dawn of human history, right? If you own the land, if you own the property, there's a good chance at some point you're going to be wealthy, right? In some way. But the issue with real estate investing is that it comes with a lot of issues, right? It comes with a lot of problems that experienced real estate investors get tired of after a while, and beginners are unaware that they're even going to encounter, right? So if you decide to own property and be a landlord, you have to fill vacancies, you have to make repairs on your property, you have to pay property taxes. Maybe somebody's calling you at 2 a.m. to say, hey, my neighbors are being annoying or my toilets are broken, right? If you're a wholesaler or a flipper, right, there's a lot of hustle to get those deals together. You're competing with a bunch of other wholesalers. You have to chase down contractors to make sure they're doing the work that you're actually paying them to do. So real estate investing, while it works, comes with a lot of issues that not everybody wants to deal with, right? And so today I'd like to offer you a different perspective, which is how can we benefit from real estate investing without taking on those problems? How can we be the bank and not be the landlord? Okay. So with that in mind, I'd like to ask, how do banks make their money? Right? Banks do not make their money through, what's going on with my slides? Come on, slides. There we go. Cool. So, banks do not make their money through real estate investing, right? Or stocks and mutual funds and stuff. That is not that's not the bread and butter of the banking business, right? They do that, they do those things, but that is not how they make the majority of their money. The majority of bank money is made through lending, right? Whether that's personal loans, private loans, home loans, business loans, car loans, whatever the case may be, right? Banks give out money and expect to receive a return at a particular interest rate for loaning that money out, right? Now, why is that the route that they choose? Well, number one, these loans create passive monthly cash flow, right? So every loan that a bank gives out is a new income stream, a new passive income stream, right? So they keep those passive income streams rolling in and give out more and more and more. And, they don't have to necessarily go out to make their income, right? It comes to them. The second thing is security through collateral. This particularly pertains to home loans, car loans, maybe business loans, right? But they know that, hey, if the borrower doesn't fulfill their end of this agreement, right, if they default on the loan, we know that we have some valuable collateral coming back to us to make sure that we recoup our money, right? So banks are comfortable lending, tens of thousands of dollars, hundreds of thousands of dollars because they know that they have a security on the back end. And then the third thing is control over ownership. Like I said, when you're investing in real estate, when you're a landlord, you have a lot of responsibilities for that property, right? You have to keep it looking nice. You have to keep your tenants in line. You have to make repairs when necessary. There's a lot of stuff that comes with ownership. And you can still earn income, right, on that rent, but is it always worth the trouble that you have to go through to earn it, right? So from the bank side, they give out the money. They say, hey, you just have to pay us back X amount a month, but no one's calling the bank at 2 a.m. to say, hey, my toilet won't stop running, right? My neighbors won't be quiet. That's not the bank's problem, okay? So with mortgage note investing, the key, right, the kind of motto that we say is own the paper, not the property, okay? So really quick, what is mortgage note investing? As we said, right, banks will lend to aspiring homeowners. Someone will go to the bank and say, hey, I found this house that I like. I'm coming in with this much amount to put as a down payment, but I need the rest of the funds to complete the purchase, right? So the bank says, okay, we'll draft up a mortgage loan, right? This mortgage note establishes the monthly payment amount, the interest rate, right, the terms of the loan, how long the loan is. Most mortgages are 15 to 30 years, right? What happens if the borrower defaults on the loan, right? Typically the property is used as collateral, right, which is the bank's security. Okay, so they go ahead and they give out these mortgage loans and they collect on them for a number of years, but eventually the banks need to recapitalize, right? Maybe interest rates have changed, right? Maybe they've gone up and the bank wants to give out more loans at higher interest rates. Or maybe there's a big development happening and the bank wants to take part in that, right? But they need the capital to do so. So what they'll do is they'll sell off these old loans to receive the lump sum now, okay? Now, if they were to hang in there for the duration of the loan, right, and collect on that interest, they'd earn more over time, but they want to move now. So they'd rather just sell off the rest of those payments, right, and collect that lump sum. So someone like myself comes in, a note investor would come in and say, okay, since you're selling these notes, I'll take a look at them. and I'll buy them from you for a discount, right? So if there's $100,000 balance remaining on the loan, I may come in and say, I'll pay you 80,000 or 90,000, depending on how the loan is performing, right? But at the end of the day, we go ahead through with that deal. I take the bank's place as the lender, right? And now I am the new recipient of those monthly payments, right? To the borrower, it doesn't make a difference, right? Most mortgages are sold 3 to 4 times before they're completely paid off or refinanced, right? So to the borrower, it doesn't matter. It's just, okay, where am I sending the check, right? But from our end, we're replacing the bank as the lender. We become the new recipients of those monthly payments, and that generates that passive income that we're looking for, right? So I hope that makes sense so far. Again, drop it in the chat if I'm moving too fast or if you have any questions, and I'd be happy to go back over anything else. But to those in the know, mortgage note investing is considered to be the best kept secret in real estate investing because it is the only vehicle that I can think of that has all 4 of these following elements all in the same place. Okay. So the first is low risk. Again, every mortgage is tied to a piece of physical real estate, a physical asset as collateral, right? So this collateral protects your money. It protects your investment to say, hey, if this person stops paying, if this person is not able to uphold their end of the deal, right, we have the right to go and claim that property as collateral and make sure we get our money out. Okay, so there's great security in mortgage note investing. Okay. The second thing is predictable income. Okay. When you're investing in mortgage notes, you're buying contractual agreements. Okay. So the mortgage note, the terms are already laid out. They say that this person owes X amount a month for this many months at this interest rate to continue paying on this property. Right. So the terms are already laid out. When you invest in maybe more common vehicles like the stock market or even traditional real estate, right? These are market driven assets, which means that there are a lot of external factors that an investor has no control over, right? That can have a significant impact on their money, right? When the market's up, it looks good. When the market's down, everything goes down, right? So by investing in notes, you are removing that likelihood of being affected by these outside factors, right? Your income becomes predictable. The third thing is outsized returns. Okay. When you think about the average stock portfolio, for example, you're talking about 6 to 10% return on average, which is good, right? But again, you're incurring that risk that we just spoke about. When you're buying mortgage notes, number one, you're buying them at a discount. Okay. You're buying them for less than the balance that's owed, which means you're immediately creating equity, right? You've made money right off the buy. But then it's, on top of that, you're likely going to earn larger spreads, right? Because of that discount. So it's not unheard of to receive, double-digit returns on note deals with that added layer of security and predictability that we just talked about, right? And then the third and final thing is passive cash flow, right? This is what we're after at the end of the day. Again, we're going to stop exchanging our time for money. Okay. When we get these note payments coming in every month, we can, put these monthly payments to the side to save, or we can use them to replace our active income, right? We can exchange our passive income for active income, or the other way around rather, and start living more free, right? Start doing some more with our time. Maybe we can stuff it away for retirement. But at the end of the day, this passive cash flow allows you to open up your flexibility and your opportunities with what you want to do with your life. So these elements, all 4 together, is what makes note investing, in my opinion, and to the opinion of those who are knowledgeable, the best kept secret in real estate investing, right? So what I want to do now is take this concept and apply it to a case study. I want to put some numbers to what I'm talking about so you can kind of see how this works, right? So let's move on. And here we have a property that's valued at $142,000, right? The mortgage balance remaining is $108,000. There's an 8% interest rate, and there's 15 years left or 180 payments, right? 180 months left. The monthly payment on this note is just over $1,000 a month. I'm going to speak in round numbers for the sake of simplicity, but you can see the actual values on the screen. Okay. But the bank decides that they want to sell this note, right? They decide they want the lump sum now, and they're going to sell this note for $89,000, right? So Smart investor like yourself says, okay, this checks out, all the paperwork looks good. I'm gonna go ahead and buy this note. So you put up $89,000 to buy this $108,000 note. Now, not only have you created a $19,000 discount right off the bat, all right, you've also secured by a property that's worth $142,000, right? That's your collateral for this note. So you've immediately made money, instant equity right off the bat, but that is not where it gets good, right? You may be listening to this and saying, okay, I get that, but where do the monthly payments come in? And that's where this next part comes in, right? Note investing is investing, okay? All forms of investing incur risk, and I'm not here to tell you that this is some magical strategy where you'll never lose and you're gonna shoot for the moon, and that's not honest, all right? But what I will tell you is that when you can predict your outcomes, or you can understand what the possibilities are, it makes it a lot easier to plan and gives you a much greater sense of peace in your investment, okay? The beautiful thing about note investing is that there are only 3 possible outcomes, okay? And when you understand these 3 possible outcomes, it makes it very difficult to lose on a note investment, all right? Rod says, when looking at notes to buy, do you aim for a high, I'm assuming that's high return or LTV? So yeah, when looking at note investing or looking at notes to buy, looking for LTV below 80%, even lower than that if you can, if you can find it. Because at the end of the day, again, your property is your collateral. So you don't want your loan to value to be too high because, if that person defaults, you don't want to end up upside down. So yeah, 80% is kind of the high boundary for the LTV. And there are a number of conditions that we look for in due diligence before we go ahead and pursue a note. But I hope that answers your question. But going forward from here, the 3 possible outcomes are, number 1, pay as agreed, right? Your borrower makes their regular monthly payments in accordance with the note agreement, right? They know what they signed up for, no issues. They have good, steady income. They make their payment every month, and you just coast to the finish line, right? And Rod, if I didn't answer your question or you have a follow-up, please ask. I'd be happy to address it. Number 2 is early payoff, right? The borrower refinances to get a lower rate, or they sell the property, and in order to be free and clear of your note, of your mortgage, right, they have to pay off the rest of your note, right? So you receive your returns ahead of schedule. It's a nice little gift, nice little blessing. And then, of course, the scary one, fail to pay. The borrower defaults on the loan, and you have to claim the property as collateral, okay? So these are your 3 outcomes. No matter what happens with the note, you're going to end up in one of these 3 pots, right? So we're going to go ahead and apply these outcomes to our case study so you can kind of see how the numbers work. Okay. Outcome number 1 is pay as agreed. Okay. So again, your borrower knows what they signed up for. They're smooth. They're consistent. No worries, right? So you're receiving your monthly payment of $1,032 a month for the remaining 15 years, that remaining 180 months. Right? And at the end of that 15 years, you turned your $89,000 into just shy of $186,000, right? Off of those monthly payments. Now, if you subtract your investment amount, your 89 from this final balance, you're looking at an annual return of 11.37%. Okay, so we're already starting off hot. We're already starting off in double digits, right? That's a good thing. Outcome number 2 is the early payoff. All right. So let's say that you've been receiving your monthly payments for 5 years and everything's been cool. And then your borrower says, I think we're ready to move. We're ready to sell the property. The kids have moved out, or, we're just ready to move somewhere else. What does that mean for your investment? Right. Well, you've collected 5 years of payments already. Okay. So you've been collecting your $1,032 a month for 60 months. You're looking at just shy of $62,000. In passive cash flow that you've collected over the past 5 years, right? Now, if you paid a loan of any kind, as most of us have at some point, you know that part of your payment goes to principal and part of your payment goes to interest, right? So even though you've already collected $62,000 in monthly cash flow, your note balance has only gone down by about $23,000, right? So you're still owed 85K or so on that note for it to be paid off, right? So your borrower goes ahead, they sell the property for whatever they can get it for. You add your 62K in cash flow to the 85K payoff, and you're looking at about $147,000 collected in 5 years, right? So again, we do the math, we subtract our amount invested from the total collected. In 6 years, and I'm sorry, in 5 years, 60 months, we're looking at about $58,000 in profit from this note deal, or an annual return of 13.29%. Okay, so we're trending in the right direction. We started with 11, we're moving up to 13, we're going in the right direction. Okay, the third outcome is fail to pay. Okay, life happens, and sometimes we end up in less than ideal situations, and we have to deal with those. But let's say after the same 5-year period, your borrowers get divorced and can no longer afford to make the payments on the property. Does that mean that your investment is dead in the water? Of course not, right? At this point, you're going to have to take steps to claim the property as collateral. Now, let me pause here and say that as note investors, we're not jerks. We're not here to kick people out of their homes and take them away. One of the things that I like most about note investing is it is a lot more personalized approach than you would get with a bank or an institution, right? Where they would say, hey, pay us or give us your house. We don't really care what's going on. As a note investor, we can kind of work with people in their situation, and we have other options before we get to foreclosure. So maybe we say, hey, it would cost us X amount to foreclose on you. How about I pay you, $2,000 or whatever the case may be to sign the property over. You can walk away, start fresh somewhere else, right? No foreclosure on your record, no eviction on your record. You can start fresh. Maybe the person living in the home passed away and their kids don't want to deal with it, right? We can tell them, hey, you can sign the property over to us free and clear. You'll be absolved of the liability for this mortgage. You can take that weight off your shoulders. For a lot of people, that's a relief, and that's a reality, right? Or maybe your borrower was out of work for a while, right? Maybe they got hurt or they got sick, and you can do a modification on the loan to help them catch up while they stay in the home, and you still receive your monthly payments, right? So there are other options before foreclosure, but at the end of the day, we do have to take steps to claim that property as collateral in order to make sure that we're getting our money out of the deal. So once we claim that property, it becomes our property. We can do whatever we want with it, right? We can sell it, we can rent it out, donate it. If you love it that much, you can move in, right? But the majority of the time, we're going to choose to sell so that we can get our money out and go ahead and do the next deal, right? So let's say we take the property back, we sell it for $142,000. Now consider this, it's been 5 years, so there's a pretty good chance that it has appreciated past $142,000 at this point, but this is the number that we started with, so we're just going to stick here, right? So you sell the property for $142,000. You've already collected your 5 years of $62,000, right? Your 5 years of monthly payments. So you're going to add those numbers up. You're going to subtract about, let's say, $13K for legal fees, because we did have to go through the foreclosure process, and then we hired a realtor to help us sell the property, right? So we're going to subtract those legal fees, and at the end of all this, we're looking at a total collected of just shy of $191,000, right? We're going to go ahead and subtract our initial amount invested, and you'll see the total profit here says 72 months. So we're going to assume that the foreclosure and sale process took an extra year. But for a 6-figure profit, personally, I can be patient. Personally, I'll wait for that. I'm assuming you would too. If I'm wrong, let me know in the chat. But you can see here a total profit of $102,000 or 15.84% per year, right? So this is what I mean when I say that note investing makes it hard to lose, right? When the deal went the way that we thought it was going to go and the borrower paid as agreed, we got 11.37%. When we got a gift and our note was paid off early, right, we got 13.29%. And when we were inconvenienced and had to do a little bit of extra work to resolve this, we got our highest return of 15.84%. So this is what I mean when I say note investing makes it hard to lose, when you understand those 3 possible outcomes. All right. So I hope you all are still following me. Again, keep asking questions if you have them. I'd be happy to discuss any of this. But I'm going to move on because earlier I told you that note investing is the best kept secret in real estate, right? What I did not mention is that that is only half of the secret, right? And the other half is that you can profit from note deals without doing any deals of your own, right? Some of you may be sitting here watching and saying, you know, this sounds cool, this looks cool, but I don't have the time or desire to learn how to do this, to learn a whole new skill. It seems complex, it seems whatever the case may be, right? And I'm here to tell you, you don't have to. You don't have to do that, right? And that is because as a note investor, I get new deals sent to my inbox every day. And there comes times when a great opportunity pops up and I just deployed my capital to another deal, or maybe it requires a little more, maybe it's out of the price range that I'm looking for right now, but it's still a really good opportunity, right? And so instead of sitting there and going, dang, I really wish I could have took advantage of that, but I guess I had to let it pass, right? Instead of doing that, I think about my network, right? I think about who would like to earn a little passive income, hands-free passive income, would like to help me close a deal. And I reach out to my network and I say, hey, you know, I have this really great opportunity, this really great deal that I'd like to take advantage of, but it's going to require a little more capital than I have on hand right now. Would you be interested in making some passive income? Right? You don't have to do anything but put up the capital to fund the deal. And for doing so, I'll pay you every month, right? Just for helping me out. You're totally hands off. And they say, sure. I mean, that sounds good. You know, a little hands-free passive income. I can always use that, a couple $100 a month or whatever the case may be, right? And these people are my private lenders. Okay, so private lenders are people with some money to invest. All right, again, they're interested in hands-free passive income. Maybe they're looking to park their money for a limited time. You know, maybe they just closed on another deal, or they're in the middle of a transition and they want their money to earn some interest with some security, right, while they figure out what their next move is. So we say, hey, you know, loan to me for a year, loan to me for 2 years. I'll pay you every month for that duration. Then when you're ready to go make your next move, we'll return, you know, we'll make sure you get your money back and you can go make that next move. Okay. People who want to profit from the expertise of others, right? Maybe they have their own lane in real estate investing. Maybe they have their own 9 to 5, right? So they profit from the expertise of note investors like myself. And then secured investments with high returns, because you can be a private lender on literally anything, right? Your brother can call you and say, hey, I'm building a pool in my backyard. I need 20 grand to finish this up. Will you loan it to me? Right? And you can say, yeah, but if he doesn't pay you back, you can't dig the pool up and take it with you, right? So we're talking secured investments with high returns, okay? So where are these private lenders finding this money, right? Some of them have it in savings, but if your money is sitting in a savings account that you can just walk into the bank and open up, you are losing money, because these standard bank accounts, standard savings accounts, they pay less than 0.5% in interest, where inflation, is hovering around 2-3%, right? So you're losing money consistently just sitting in a savings account. If your money's in a high yield savings account, you're probably earning 3 to 5%, which is good. But we can do better, right? We can always do better. Same thing with retirement accounts, right? Maybe the money is sitting in an old retirement account, an old 401k from a job that you don't work anymore, or maybe your retirement funds, like most retirement funds, are invested in the stock market, and you're looking for a little bit more security, right? Because we don't want to play with retirement funds, right? If the economy dips and your retirement account goes down, it doesn't go back up at the same rate, right? And we don't know how long we have to actually build that money back to where it was, okay? That same thing kind of applies to stocks, right? If you want, you know, maybe you made some big winnings on stocks and you want to protect some in case that next drop comes. You know, I know a guy a few months ago who, when the stock market tanked, lost 200 grand, right? And unfortunately, there's no telling how much time he has to get it back and surpass that level where he was before, right? So you may want to take some of that and put it away, right? Maybe there's a life insurance policy that these people want to borrow against, or maybe they're, again, real estate investors. Like I mentioned in the beginning, maybe they're just tired of dealing with the hassles of real estate investing, right? Whether that's tenants and repairs, whether that's wholesale hustle, whether that's flipping and chasing down contractors. Some people are just ready to take a step back and be more passive. Okay. So I'm going to apply a private lender example to our case study, just so you can kind of understand how this works from the private lender angle. This here is Eddie. Okay, Eddie's an engineer. He's really good at his job. He makes some decent money, but he's super busy, right? And Eddie says he wants to get invested in real estate, um, but he doesn't have the time. He doesn't have the time to learn. He doesn't have the time to analyze deals and do all that. And so I go and I say, hey, Eddie, I know we had a couple conversations and you said you want to get involved in investing. I have this great opportunity, right, to go ahead and make a nice return. Would you loan me the money that I need, the capital that I need to go ahead and close this deal? And he says, sure. I mean, I have some money in my self-directed IRA account. How much do you need? And I say, well, Eddie, if you'll loan me the $89,000 to take down this deal, right, I'll give you 8% interest on your money. Eddie says, well, I'm earning 5% now. So, I mean, 8's better than 5. Let's do it, right? But what does that look like? And I say, well, for loaning me that 89K at 8%, you'll receive $850 a month, right, into your SD IRA account. All right, now remember, our mortgage note, our case study example, pays out $1,032 a month, right? So Eddie is receiving the lion's share of that monthly payment, right? As the note investor, I'm taking the smaller share, but for helping me out, Eddie, he takes priority, he gets his return, okay? So the next question I ask is, hey, how long would you like to do this, right? And he says, well, I'm a pretty young guy, I can't touch this money anyways in my retirement account, so let's just ride it out. All right. Let's just do it for the full term and let it go. All right. So say, okay, Eddie, that sounds fantastic. He receives his $850 a month for the next 180 months, the next 15 years. And at the end of that term, he turns his $89,000 into $153,000 in his retirement account. Right. All the while he's receiving those passive monthly payments. He knows that it's coming in every month. He doesn't have to worry about markets going up and down and affecting his money in his retirement account. He knows that he's getting that 8% annual, right? Contractual growth. Again, these notes are contracts, right? He knows that we have an agreement that I'm going to pay him $850 a month. He knows that this is tied to a mortgage note with collateral on a property, right? So he feels secure in this investment. He sleeps well at night knowing that his retirement funds are protected, okay? Again, no market volatility. We touched on that already. And then he's helping to provide a family housing. Okay, how does that work? You may say, okay, that's kind of a stretch. But when people buy a house, when people get a mortgage, as they make payments on these mortgage on their mortgage, they're building equity in that property. They're building equity in that home, right? And as they build equity and move closer and closer to ownership, right? Hopefully the home eventually gets fully paid off. And now they have an asset, a real estate asset, free and clear, to be the beginning of that family building wealth, right? So Eddie can feel good about that. There's kind of a morality aspect to that, all right? But at the end of the day, in the event that these people are not able to fulfill their end of the deal, their end of the loan, he knows that he has valuable collateral to make sure that he gets his money back, right? To make sure that his investment is not going to waste, that his retirement account is protected. So Eddie feels great about being a private lender. Maybe a few years down the line, he has some more money in that account and says, hey, I mean, the first one was great. Can we do it again? To which, of course, I would say, yeah, right? But I say all this to say, again, I'm always on the hunt for good deals. I'm always talking to other note investors, banks, and seeking these opportunities. And I genuinely feel like there's no point in me doing this by myself, right? I love to share the wealth. I love to collaborate with others. And present this opportunity to as many people as I can, because not a lot of people know this exists, right? And the more people I can get their hands on it and kind of get this passive income into their lives and start making these shifts that we all kind of desire, the better we'll all feel, right? So as I find these notes, as I find these opportunities, can I call you when I find one, right? That is my ultimate question. Because at the end of the day, we have limited time. If we're being real, we have limited time. We never know how much time we have, and we deserve more freedom in our lives. That is my goal. I know that that's the goal of a lot of other people, that we deserve more freedom, and it's possible, it's attainable, and we can get there faster when we work together, right? And so with that being said, I just want to say thank you. Thank you for taking the time to sit here with me on a Sunday and learn a little bit about note investing. I do have some free ebooks in the description of this video to kind of expand on what we've talked about here today. If you want to learn some more or contact me, You can email me at brian@note-genius.com. You can visit my website and schedule a call, note-genius.com. Please follow me on social media, right? Subscribe to the YouTube channel, my Instagram. I post clips of interviews, I post tips, vlogs, right? I want to keep this as genuine and authentic as I possibly can. So when I win, I'll show you my wins. When I lose, I'll show you my losses. But I want to keep this as real as I can possibly keep it, because this is an opportunity that a lot of people can take advantage of. Okay. So with that being said, thank you again. I hope tomorrow is an excellent start to your week, and I hope to talk to you again soon.